Welcome to the Justin Ng Show, where real entrepreneurs and investors reveal how they turn humble beginnings into high-impact ventures. From bold moves to capital raises, we unpack what it really takes to build and scale greatness. Let's go check it out. What happens when fighter discipline meets data-driven real estate? Today we break down how a Las Vegas native went from bodybuilding and Muay Thai to building platforms and partnerships that scale. We'll walk through a real acquisition from first look to close. Welcome back to the Justin Ng Show. I'm joined by Blake Owens, entrepreneur and investor behind Agrippa and Augustus Capital, focused on tech-enabled deal flow and smart execution. We're talking market selection, underwriting, and the operating habits that keep teams sharp. Blake, welcome to the show. So today we have an amazing guest, Blake. Welcome to the Vegas Podcast Mansion. Shout out to Bill Walsh from the Power Team, and so Jackson Wright, who runs the Vegas Podcast Mansion. So thank you so much, Blake, for joining us here today.
Absolutely.
How I start the podcast is usually just ask your journey, from humble beginnings to where you are. I know you have a lot of stories to share about your AI, your QAF, your funds, and how you successfully gone through that and build up that process, the whole thing.
Yeah. So just to give you guys a bit of background on my family history, it actually dates back, roughly over 100 years. So my great-great-grandfather moved to Nevada to be a gold miner.
Oh, wow.
Yeah,
that's amazing.
So originally moved to Nevada. Family was established in Searchlight, Nevada, which is a town, if you're headed towards Reno, small town. Yeah. And then the family ended up moving to Las Vegas in 1917. And so actually it's maybe two streets up. Owens Avenue was named after my great-grandfather.
No way.
Yeah. There's debate about whether or not it was him or a guy by the name of it was Moses Owen, but his last name didn't have an S on it, so kind of fair to assume it's Owens. But yeah, my great-grandfather was the Clark County undersheriff for about 15 years. He was, he'd tell me stories about Bugsy Siegel, who was kind of a well-known guy in Vegas back in the day. And he was the first person to pull Carole Lombard, who was a famous actress back then, out of a plane crash in 1942. And so it was a very interesting story behind my great-grandfather. And then after that, he became a rancher, a farmer. Because when the family moved here, they got 40 acres of land that's actually roughly in this area. That's why the street was named after him. My great-grandmother bought it for $1.25 an acre.
Wow.
And yeah, the land didn't pass down through the family. At least I don't know what happened to it through the generations. But my great-grandfather then had a son, my grandfather, James, who then was also a rancher turned bee farmer. And then my father has been working at Treasure Island for the last 30 years. And then started out at actually the Golden Nugget as well. So long family history in town.
Wow, that's amazing.
Yeah. And then I was born here, rather my mother's side. She came to the state it was a late, she was born in 1971, but the family moved here in the late 70s. And her father founded a air conditioning company. And then that passed down to my uncle, but her mother was an accountant, so I think that's where I get some of my
accounting.
The
numbers. Yeah, that's amazing. Yeah.
And then so my parents actually met fighting. Rather, they met at my father's belt testing. So my father's a second-degree black belt. Mother's former boxer, who's trained by Roger Mayweather, actually. So she was pretty good, and grew up in a pretty structured household. Always very disciplined.
Yeah.
And then, so I went to school at an elementary school called E.J. May. And then I went to Faith Lutheran, which is in the Summerlin area.
Yeah.
And then when I was 15...
I think that's the one with the
cross and the...
I always see the placard on people's car.
Yeah, yes, probably.
Yeah.
So when I was 15, a kind of unique life scenario gave me the opportunity to go to a boarding school. And so I left here at 15, went to Connecticut, went to a boarding school. Yeah, it was a huge culture shock. Coming from Vegas, it's a very different environment. I go out to the Northeast, kids from various different backgrounds, a lot of international students. It was a great bit of cultural exposure for me. And then by my senior year, I was school president and then got into Columbia and New York City and UCLA. Yeah, and for different reasons, ended up picking UCLA. So moved back to the West Coast and initially wanted to be a plastic surgeon. But
Wow.
after a couple months of pre-med, I just figured this is not the
It's not
track for me.
okay.
Yeah.
Yeah.
So I switched my major to economics, cold called 50 places to get my first internship. So I started in wealth management at a firm called Wedbush Securities.
Hmm.
Then I went to an investment bank called Seymour and Associates. And then I went to, after that was Goldman Sachs in San Francisco.
Wow. Nice.
Yeah. And so then worked in Southern California for a bit and then moved back to Vegas in 2017. Yeah. I
Wow.
know a long winded answer, but yeah, there's a bit of backstory.
And then how do you go from that to where you are right now?
So I was essentially poached by a multifamily developer, apartment developer here. He saw that I was good at Excel. Had probably the best salesperson I've ever met. Was a very, very convincing guy. Had an ability to pull together deals and just needed some help to underwrite those deals, understand the financial feasibility, and help raise the capital. So I was there for a little over 4 years. By the time I was 24, I was named chief investment officer. And then by the time I was 26, the whole team, we closed a little over $600 million in transactions, ranging from refinancing land loans to closing construction loans to selling one of the first properties that was already under construction when I joined the company. But yeah, it was a very compact 4 years. And we had partners like Silverstein Properties, who built the World Trade Center, Cantor Fitzgerald, Carlyle, Lennar, specifically their multifamily division. And then had a lot of frustrations with the process of raising capital along the way, and wanted to create a tech company to essentially just address that and solve my own problems, that I was dealing with there. So I left the company in 2022 to start Agrippa, and I've been working on that ever since. And then just recently started a sister company called Augustus. And so that is, if you think about Agrippa like Match.com, essentially
Okay.
for commercial real estate, and implementing technology to bring people together more efficiently. When you have that kind of hub of deal flow, it's I have a good amount of insight into the good and bad deals. So I wanted to start Augustus as a way to invest directly into the best deals that come through the platform. So they kind of work in tandem.
Okay.
Yeah.
So let me just understand. So Agrippa is the one that sources all the deal flow,
Mhm.
and Augustus is the one that raise capital for the deal flow.
Yeah. Yeah.
Gotcha. Okay.
Yeah.
And they're all technology driven.
On the Agrippa front, yes. On the Augustus front, more just traditional private equity real estate investment. On the Agrippa front, it was actually interesting because we started out as a financial modeling software, because it's kind of my background, my specialty, I guess you could say. And I wanted that to be the universal language as parties were coming together. And as you know, as an engineer, things are always turn out to be more complicated than you think.
Mm-hmm.
And so I would build very complicated models in Excel, and I thought it would be pretty easy to just translate it over to a web-based application. And turned out it was a lot more complicated. And we took 18 months. The first 18 months were spent on building out that model, and it just became very data intensive, very cost prohibitive of just storing all that data. A lot of issues with circular references that are easily done in Excel, not as easily done in code. And so we, essentially just moved from phase one of the model to phase two of bringing parties together. And then, let's see, it was second half of last year, found a marketing channel that worked really, really well. And then we started getting flooded with signups, almost to a overwhelming extent. And then, as deals came through, signups came through, we wanted to maintain a level of quality control in the types of users that come on platform and the types of deals that come through. So it took a lot of just manual review. Every deal that came through, or every sign up that came through, hey, we need to vet them, look at their backgrounds, look at their track record. And it took a lot of time. Same thing with the deals. Take a look at the financial model, take a look at the pitch deck. And then we figured, let's take a step back. let's implement AI to help automate the review process, and go through the models, go through the deals, go through the users, search their backgrounds, and help expedite that process. So it took several months to implement those features, and it's been quite a learning curve being a traditional kind of finance, commercial real estate guy, to being a tech founder.
Yeah.
But AI has made it, to where you can learn anything and everything so long as you learn quickly enough. And so I've, myself have started to code now. I initially, when I first started the company, I didn't have anything. It was just an idea. I go and I talk to who is, our first investor and still our largest investor. And so I pitched the idea to him high level, just kind of talking through the idea. And his first question back to me was, well, when are you going to quit your job? And at the time I was obviously doing very, very well at a very young age, and decided, well, you know what, why not? So left the company and then just started building. Didn't have mocks, didn't have any sort of designs. Started building designs in PowerPoint, just because I was used to using PowerPoint for commercial real estate pitch decks. So started building out mocks in PowerPoint, and then found out something like Figma exists. And so started using Figma, got pretty good at Figma, and so became a product designer. Now, front end engineer. I don't do much of the back end, but essentially I wear a lot of different hats. So it's building two companies at the same time and playing a lot of different roles. So it's been very exciting. And then in the last couple of months have been probably the most exciting. So late last year, I was pulled into a deal that was actually in east side of Vegas. So a hotel deal that was originally built by one of our investors. And when he sold the property back in 2016, he sold just the building. He didn't sell the land. So he still held on to the land, what's called a ground lease. And then he brought that deal to Agrippa. We figured, okay, there's a way to generate interest in this deal. And there was a couple of users that came through that were interested in buying it. And then I got personally involved, and it helped us establish a little bit more of an advanced kind of game theory thesis that I don't know if you want to get into the specifics of that, but was deeply involved in that transaction. That sold, and that generated a substantial capital gain for him. And then I don't know if you know much about the Opportunity Zone program, but that is the whole QOF.
Okay, so that's the one you just finished.
Yeah. So that was recently announced. So it's a $7.5 million fund allocated to $2 million to Agrippa itself, and then the rest of it is allocated currently to a project in Salt Lake City. And so this will be kind of the first of what I envision to be several funds, though I do in the near term see most of my focus is in building Agrippa. Augustus is really more of like a byproduct of Agrippa's success. So it's been very exciting.
Yeah, it's so profound. It's crazy, like what you've done. Like you left the company, and then from there you just built everything up, and you did everything. You basically went through, I guess, you went through AI and say, hey, how to code, and then just start building everything.
Yeah.
That's why you're asking me earlier, am I a full stack developer? I was like, I know a few of them, but I'm not a full stack developer. I used to be maybe just part of the stack, like doing databases and stuff. But other than that, I didn't do much. And but that's truly amazing. I'm pretty sure there's so many challenges you came across.
Yeah. I think it's almost a rite of passage, for a startup founder to go through struggle, and that was something I underestimated, I'd say, in the beginning. Because when you're young, I'm 29 now. When you're young, you don't quite understand just how difficult the world is and how difficult it is to be successful. Even if you come from nothing, or if you have help along the way, it's always going to be difficult. And first big struggle is just not being a technical founder. And so I actually spent 6 months to find my first engineer, who was a technical co-founder at the time. Went through the struggles of having a founder breakup. It was about a year after he joined, so it was October of 2023. And there's a lot of things that happen out of a co-founder breakup and trying to pull together the pieces. And make sense of the code base, knowing that I wasn't the one who originally built it. Yeah.
So you had to pick up everything.
No. So
Oh.
we have our second engineer who came on
Okay.
shortly thereafter has been absolutely wonderful. He's based in Indiana, and so former engineer for Meta, got his bachelor's from BYU, master's from University of Illinois, and then PhD from Notre Dame.
Wow.
So yeah, he's been great. And you deal with the struggles of raising money and building at the same time. When you raise money, you get soft commitments, and it's one thing to get a soft commitment, a whole different thing to get a hard commitment and money wired.
Mm-hmm.
And so with what the economy has experienced over the last couple of years, that's happened to a lot of founders, where you go and you get these commitments, and then investors fall out, and so you have to figure it out. It was never really an option to just quit and give up. Like I never thought that would be a pathway, despite all the struggles. But managed to pull it together, and then as the economy is still on shaky ground, I think it'll get better over time. Certainly can't get any worse than second half of 2022, 2023. 2022, when I left the company, it was the peak of the market, essentially, first half of 2022. So it was, all right, is this a good time or a bad time to start a company?
Yeah, that's when all the interest rates was really low, right?
Yeah. So rates were low, and then obviously rates skyrocket just to offset inflation, and commercial real estate takes a huge hit because it's very interest rate driven. And so it was very, very, bumpy for a while, and trying to figure out what do people want. In commercial real estate, there's just so many problems. So many things to solve. Whether it's the modeling, whether it's the bringing people together, whether it's internal operations, a lot of problems to solve. And so the demands from users change, and so you have to pivot and adjust, and make sure you're building something that people want. And right now in this environment, and kind of always, people have struggled to raise money. It's definitely not easy. So we figured, let's focus on that. And then AI has progressed tremendously over the last year. Even, I mean, the last year was second half of last year, and then the first couple of months of this year was just massive progress.
Now it's just like common.
Yeah. Now it's makes things much easier. I mean, don't get me wrong, there's still a very long road ahead, I think, especially with implementing AI to physical things like robotics, and obviously like what you're doing. Like
that's where we are. The robotics is the big part.
Yeah. So that I think is going to take some time.
Adoption.
But it's adoption, getting people comfortable with it, getting people to trust it. And what we do when it comes to deal review, user profile review, it's giving them feedback that they can trust. That, hey, if a user has a pitch deck that lays out a certain way, you should readjust the order, you should emphasize this or de-emphasize that. That way you have a higher likelihood of attracting investors. And so it's raising money is just as psychological as it is.
And that's where Agrippa comes in.
Yeah.
So Agrippa is like a one-stop shop where people can say, hey, I have this value add or development. Here's my pitch deck, here's my numbers, here's my T12 or whatever they have. Go ahead and go through your model. So plug it in, and then it'll spit out and tell you what the AI says.
Yeah. So essentially, let's say a user signs up, they build out their profile, they identify their team, their track record, what have they bought and sold or built in the history of the company. And then they can go and conduct a review on their profile, which will help identify certain correlations as to, hey, if the company was founded 20 years ago, but has only done 2 deals, like that's probably doesn't look great for optics, unless those 2 deals were massive mixed use developments. Looking at the team, based on the titles of the team, does it seem as if there is sufficient level of expertise given the company's investment thesis? If they're a development company but they only have acquisitions staff, okay, hey, something's off here. So giving guidance as to what their presentation of their company would look like to the other side, and then giving them a feedback score, and understanding, hey, this is 100%. You guys are, you know, checking every box, and you're likely going to have a, perhaps not easy, but a much easier time than others to go and raise money. Now, when it comes to the deals, you go attach your model, attach your deck, describe the deal. What are some highlights? Attaching pictures. Then the model will go and review all of those things and assess whether or not, again, kind of like the user profile score, here's a feedback percentage. Here's where it lines up, not only in and of itself, but how it stacks up compared to other deals on platform, just to give people a gauge on the difficulty level, I'd say, of raising. And then when it comes to putting the deal on, we enforce a pretty strict double opt-in process. So for either side that comes on, they have certain preference profiles. Here's a series of questions to answer. That way we can understand what exactly it is you're looking for. And then in terms of bringing the parties together, they won't see each other or each other's deals if their preferences don't align. Because we don't want cold outreach. People's email inboxes are already flooded as is. So an investor won't see a deal unless it lines up with their preferences, both the preset preferences and observed behaviors. So if they're on platform, they're looking at a deal and they spend 30 seconds on one deal, another one they spend 5 minutes on. Well, let's take the characteristics of that second deal, use that to influence what they see moving forward. Just a basic kind of machine learning algorithm, like what you see on Instagram. If you start
Yeah. You
looking at
start
a
looking
lot
for
of
something, all of a sudden you're flooded with that.
boom, yeah. If you suddenly start looking at cooking content, you're going to see more cooking content. So trying to tailor it to people's whether known or rather conscious or subconscious preferences. That way we can bring people together in a more meaningful manner. That way folks aren't wasting each other's time.
Yeah.
And that's been, like I said, raising money is just as psychological as it is anything. So getting to understand people's preferences, whether or not they know those preferences, is can be difficult, has been difficult, and will likely continue to be difficult.
Wow.
But it's something in the industry, dating back to my time in development. We go and raise money. We have to raise debt and equity, and even within the equity, you can have a big joint venture partner who's going to put out a big check. But if you're a developer who doesn't have a substantial sum of money as is, you have to also raise smaller checks into your side of the deal. So we would go and raise both, but would still use brokers as well. And brokers are great. Like middlemen are great. It's a function that will always be needed. But there are a lot of brokers out there that, in my case specifically, they would take my financial model, take my pitch deck, and say, "Hey, this is better than what we can make, so we're just going to copy and paste it into an email and then just start blasting it out, and then make an introduction and just disappear for several months while myself and the rest of the team had to go through due diligence, term negotiation, and then they'd come back around and at the time of close and, hey, here's a invoice for 600 grand, 800 grand, and it frustrated me, and so I wanted to build an environment where folks didn't have to rely on that, and could instead use technology to help themselves improve and find the right partners.
That's amazing. It's very profound to me because I'm trying to go through the same thing right now.
Yeah.
And was that basically what was your aha moment then building all this?
Aha moment.
That this is gonna be it's gonna be the one that's
Um, it's an interesting question. I've always had this. There was an investor I talked to one time where he was giving me characteristics of somebody who's going to be successful. You have to have a level of delusional optimism, as he put it.
Optimistic.
Yeah,
Wow. It could
and
be the same guy you mentioned earlier, right? When are you going to quit?
yeah,
Yeah.
yeah. So it was a different guy, but somebody of he had a phenomenal, very impressive background as well. Um, and so I'd say that there was not necessarily a specific aha moment. It was kind of just I was like born with the hey, I know whatever I'm going to do, it's going to work. I'll make it work.
Mm-hmm.
And at least to answer the question more specifically, though, with Agrippa, um, I would say that late last year, when we tried out different marketing channels, and marketing is very difficult to define what people, like I said, not only what people want, but what people will pay attention to.
Mm-hmm.
And so we found a channel through just actually a newsletter that worked really well. And then I woke up one morning and it was like 50 signups. By the time I woke up and checked my email, my inbox is just getting flooded. And so that was a pretty big aha moment of, okay, hey, people actually want this. It's just a matter of getting the name out there through the right channels. And then that, of course, led to, okay, hey, too many signups.
Yeah.
let's slow it down. So it's a lot of stop and go. But yeah, I'd say that was probably the biggest aha moment, and that it continued for several days on end when we had done the marketing through this newsletter, because it was every morning just waking up to a whole bunch of
Yeah.
emails of signups.
Damn.
Yeah, and so it was
So that catapulted
yeah,
Agrippa.
yeah. So that catapulted the exposure and getting people to the platform, and then it was from there. Like I said, it was too many. We got to take a step back, and now we need to build additional features because this is too difficult to streamline kind of the onboarding with such a small team.
Mm-hmm.
And so that was probably the biggest aha moment after a long time of just building. And we of course had a lot of test users and trying to figure out what people wanted. And I was able to lean on folks that I knew previously from development and get their thoughts on things. But that moment of getting a flood of signups was probably the biggest aha moment.
Nice.
Yeah.
And does Agrippa have like a competitors out there, or you guys are the only the pioneers?
I would say, in a traditional sense, a non-technical sense, of course, brokers. Like that's
Okay.
those are our competitors, the middlemen. And I get
I guess you guys
brokers.
are also kind of considered middleman brokers because, but you guys use technology. They still use the old traditional ways.
Yeah, yeah,
Okay.
and
Okay.
we're not representing users. We're not making any sort of percentage based commission because there are certain regulatory hurdles that you have to meet to be able to charge percentage based fees, and so that we steer clear of. It's hey, this is an environment for folks to come together and meet together. I do get asked on a very frequent basis to get personally involved in deals, just because of my background and the network that I've built. But I try not to get involved because there's only 24 hours in a day, and I sleep 3 to 5 on average, so I can still make use of quite a few hours, but it's not possible to get personally involved in every deal. So
Well, then thank you so much for being
oh
here,
no,
man.
no, no, I'm
This is
happy. Yeah, I'm
wow.
very happy. Happy to. And as far as the technical, that there are some platforms out there that are more of like CrowdStreet that are they put a deal on and then go and syndicate a bunch of small checks from non-accredited or accredited investors, but that's not really our focus. On the investor side, most of the capital providers on Agrippa are private equity firms, big institutions, family offices, whether single family or multifamily offices. We do, on a case by case basis, allow individuals if they're verifiably high net worth individuals, because most of the deals on Agrippa are pretty large, and so it's just difficult to pull together a bunch of 10, 20 grand checks when it's a 50+ million dollar deal.
Mm-hmm.
So we try to steer clear of that, and there are more regulatory hurdles with raising from non-accredited investors, so we try to steer clear of that.
Okay. Okay.
Yeah, yeah,
That's amazing. Yeah.
yeah.
And did you have any mentors that were the ones that actually got you to, I guess you already mentioned two of them, kind of
Yeah.
like,
Well, so the first one, first investor, definitely the number one mentor in my life. Absolutely incredible human being, very, very successful, very inspiring. The second one, he was just an investor I had talked to a few times. He was a VC that
okay,
we've been fortunate to not have to go down the VC route. We have one VC investor. I don't know if you've heard of AngelList, but they are a big tech company, and
AngelList, they're local,
Naval, yeah, yeah.
by Startup Envy, those people.
No. So AngelList is I think they were valued at 4 billion
Oh wow,
last year, year before. Naval Ravikant is the guy who started it. I hope I'm saying his name correctly. But they are kind of like, in some ways, though very different. They have a lot of ancillary features, somewhat of an Agrippa for just the startup world. They started out as a service where startups could go and raise money from individuals, and then they started introducing a bunch of investor management tools, and so they have a whole host of things. They also have a a job recruiting aspect that since has been kind of separated out, and it's rebranded to a company called Wellfound. But they saw, as companies were putting on job postings, they could collect data and mathematically determine what's the next best investment. And so they have a quant fund. It's like a $25 million fund, and they select, I think it's about like 0.05% of companies. And so we
wow,
got selected. Yeah, it was
that's amazing.
actually,
Congratulations.
yeah, no, it's a crazy story behind it. But I don't want to deviate from
Yeah,
your
that's
question
fine.
about
Yeah,
mentors.
yeah.
So that's our only VC investor. The rest are high net worth individuals and a general contracting firm. And so a few of those individuals are based here in Vegas. Our main investor, that first investor, he's also from Vegas. Was born in east side of town. Very humble beginnings. Put himself through school and became an accountant, a CPA. Then worked his way up very, very quickly at Caesars, and then went and started his own hospitality business and hotels and casinos. And
Nice.
then, yeah, and then did very well, and now he's diversified into a lot of different things. But very inspiring guy. I'd say largely because he is very very morally inclined. Very, hey, you have to do the right thing, and extremely hardworking. I mean,
Gotcha. Yeah.
when he was in his younger years, early 30s, he was working so much that he ended up putting himself in the hospital because he just wasn't sleeping day after day and had to keep, working on
Yeah.
deals, closing deals.
Mm-hmm.
So unbelievable work ethic, and it's been very, very inspiring for everything that I've done. Um, and beyond him, obviously, my own father, also unbelievable work ethic.
Mm-hmm.
I think that he's I've gotten a lot of traits from both my mother and my father.
That's amazing.
The
Yeah.
the work ethic. My mother, don't get me wrong, mother's a very hard worker, but my dad is definitely he goes nonstop. So those two, probably biggest mentors, and of course, I've learned from a lot of people along the way, um, and I think that it's very important for people to be inspired by people in their own lives, as well as from history. Like, I'm obviously companies
Yeah.
named Agrippa and Augustus,
Yeah.
so I'm
From the Greek.
yeah,
Yeah.
I'm Rome, and so
Oh, Rome.
yeah,
Okay. My
yeah,
bad.
no, I'm obsessed with Roman culture,
Okay.
and so I've studied a lot about, obviously, Marcus Agrippa and what he did, as well as Augustus, and so I think that what they did at their time is very inspiring to me, and has been mentorship in a way, to just go and read, and how did they deal with certain situations, at least with what has been recorded, in history. So I would say mentorship comes from folks in my own personal life, and people I've studied. Yeah.
Wow, that's amazing. And that's incredible. That so right now you gone through your business success. How are you? building and securing your wealth
Mm-hmm.
for you and your family now?
Yeah, so because my background comes in wealth management, like
Mm-hmm.
that's where I started. I've seen what successful people have done, and I've seen what temporarily successful people to not successful. I've seen what they've done, um, and I also got my Series 65, which is just a financial advisor. Yeah,
Wow.
I actually took that for fun. It was
Oh, really? Okay.
yeah. It ended up being a test I overstudied for,
Okay.
and it was still difficult, but not as difficult as
It's
I was
because you put in
expecting.
the hours for it.
Yeah. I know. I definitely over prepared, but so I know a bit about wealth management, and at the same time, when you're a founder, you have to have a level of risk tolerance, right? And when you're young, to be able to put everything on the line and bet on yourself. I mean, that's what I did for Agrippa, and I've invested six figures of my own money into the company in addition to raising money. So it was,
Wow.
hey, here's going from a point of making a very solid salary to zero money, not paying myself, and then putting all of my
Mm-hmm.
savings into building a company and making sure that everyone else gets paid before I do.
Mm-hmm. Yeah.
And I don't think that any CEO or founder, like they shouldn't be the highest paid person in the company. If they are, but not by a like massive margin, because of course they're going to have more equity than anybody. But wealth, generated through obviously building businesses, and investing in real estate, and so those two, now having tech and real estate exposure, are, I'd say, are the cornerstones of what I've got going on.
Okay.
Yeah.
So you're still also doing what you're doing with Agrippa on your own personal side as well, in like building,
Mhm.
um, building passive income and going through the ropes to be able to build your generational wealth
Mhm.
and just to grow that, right? What are the things that you are doing right now in terms
Mhm.
of, like, you say that you have real estate
Mhm.
and other, like, do you invest in businesses as well?
So not like currently. I mean, I allocate everything that I have to my own businesses. I
Mm-hmm.
do see a point in time in the future, where I don't necessarily see myself per se investing into other businesses, more so granting, I guess. I would like to much further down the line, like I'm only 29, but further down the line, being a mentor to up and coming, entrepreneurs that I see promise in, and providing the funds necessary for them to go and start their business, and
Nice.
not
Okay.
necessarily asking for, hey, give me a big chunk of the company
Mm-hmm.
in return. More so, here's the money, allow me to provide the guidance, and I'm not looking for much in return other than just trying to return the favor,
Yeah.
and help people. So, um, I do. I'm sure I'll find certain non-real estate businesses to invest in at some point, but a lot of what I've got going on now is basically just recycled into everything that I do. And then Augustus, of course, is direct real estate investment, so that kind of takes care of that side.
Mm-hmm.
But I think that it's important to have diversification in your portfolio, at a certain point. I think that if you're a young entrepreneur, it's pile everything into what you're doing. Bet on yourself. Make sure that you chase that big exit, and then establish yourself enough to then start diversifying into other things. And public equities are something that, I have a love hate relationship with.
Yeah.
The stock market's definitely tricky, and I for a while was doing options trading in the mornings when I was working at my last job, and was I'm from Vegas, but I've never gambled, never done any table games, nothing
Mm-hmm.
like that.
Yeah.
And options, depending on what you're betting on, it's essentially gambling in many ways.
Right.
And
Yeah.
so I was fortunate though to make a few very good calls, specifically during the spike of interest rates in 2022,
Okay.
and so that paid off.
Okay. Okay.
But yeah, in terms of wealth diversification, capital allocation, I think it's important to have allocations to tech, to real estate, to generate passive income. Because when you can make sure that your bills are paid, that allows you to live a different, more stress-free lifestyle, so you can make better decisions.
Okay.
But it's obviously, it's difficult to get to that point.
I know, yeah. So that's what I'm going through right now, and just knowing your story and everything is like so profound. It's amazing. So like in terms of investing for yourself, like
Mm,
what's working for you right now in terms of like outside of what you're doing, your main Agrippa and Augustus,
mm,
what's working for you for your investments outside of your business?
mm. Well, so like I said, those two things are vast majority of what I allocate to. Because when it comes to Agrippa, this is kind of a tip for folks that are raising money too. A
Mm-hmm.
lot of investors are looking for you to have some skin in the game. If you go and try to raise money and you haven't put any of your own funds into what you're building, it's going to be extremely difficult to raise money. And same thing with doing real estate. You're having to satisfy the GP side of things and make sure
Yeah.
that you invest your own portion of the raise. But as far as allocating to up and coming businesses, I do see more promise in certain sectors than others.
Okay.
I think that the rise of AI, of course, is going to change a lot of things, and so trying to think ahead and think which industries are going to be here, 10, 20 years from now,
Yeah.
because some may not be.
I know that's what people are talking to with the rise of AI. Some jobs are going to be totally obsolete,
Mm,
and that's where some things are getting people are kind of getting afraid of it. And also, I think also the current administration too, they're kind of push it in the same
mm,
direction. They want to move more like tech,
mm,
and so that's why for you, I guess from what you're mentioning, you're whatever you're doing right now, you're just reinvesting into
mm,
both Agrippa and Augustus.
mm,
You just want to, like you say, one track,
mm,
focus on that first, and then later on, when things are more, you can run seamlessly by itself. That's where you start will be trying to like diversify, like you
mm.
mentioned, to something else. But right now, like you say, your focus is only in um, Agrippa and Costas.
Yeah, and you bring up a good point. Is it's difficult when you're in the stages of building your own business to um, allocate the time necessary to make an intelligent investment. I think that everyone should um, do their homework, do their research whenever they make an investment.
Mm-hmm.
And when I wake up at usually at 5 a.m., sometimes 5:30, and it's get to the office as soon as possible, work the entire day. Usually get home around 6:30 or so. Have dinner with my fiance, and then it's usually back to work after that until I go to bed around 12 or so.
Mm-hmm.
So it's answering emails, getting ready for the next day, and there's just simply not enough time to allocate to researching the next investment.
Be okay. I see what you're
Yeah,
saying. Yeah. Okay.
yeah. So it's if there's something that I'm going to make a bet on, I definitely need to know. I'm a very unfortunately detail oriented person, to where I have to know anything and everything there is to know
Mm-hmm.
about
Yeah.
whatever the investment is. And then it's not just the merits of the investment; it's who's behind it, who's running it. Do I
Like,
believe in them?
yeah.
Do they have a track record? Um,
And that basically shows from what you mentioned before too, from Augustus and Agrippa. You
mm,
guys are doing that too. That's basically your spine of the business,
yeah,
and that's what you
yeah,
mentioned earlier too. So you're kind of resonating
hmm
with that. Yeah.
yeah. Because I've seen plenty of people that don't get me wrong. I do think that there are certain times where you can make an investment and you're investing in the team or you're investing in the founder and them from previous
Mm-hmm.
experience.
Yeah. The
And
track record is
yeah, and the
great.
track record, and you may not love the idea, but and you have enough confidence in that person or that team that they're going to figure it out regardless. Now, I think that that's very rare, but you should still always look at what are the merits of the actual business model itself. Is there demand for it,
Mm-hmm.
and is there an ability to execute? So it takes a lot of there are a lot of boxes to check. Um, so I'd say that in terms of me heavily allocating to things outside of myself, It has to be when there's sufficient time to make sure I can check
Yeah.
all those boxes.
Right. Okay.
Yeah.
I see what you're saying now because of, just like basically like kind of way I explained, like the time and the commitment is focused on those two only.
Mm-hmm.
Yeah. So I guess what would you suggest to people who are looking to passively invest?
Mm-hmm.
Like for me personally, I started out, I'm a W-2, right? And
Mm-hmm.
then I decided to move into try to get into real estate.
Mm-hmm.
And right now, I am trying to raise capital as well. Like
Oh yeah.
yeah, so and it's for like a passive like multifamily. So I guess we can talk about it further later. So it's something that I'm passionate about and trying to work on as well to see how things are for me. And I would love to like maybe after this we can just
Yeah. Yeah.
like
Yeah. And I
talk
mean,
about
I
it further and
I can
see.
touch on that too, because it's it's definitely ideal though what you're doing. Establishing the W-2, having that steady income there, and then being frugal, identifying what is worthwhile to invest in, what expenses are absolutely necessary, and trying to save as much and reinvest as much as you can. And real estate is obviously that's my kind of bread and butter.
Hmm.
Multifamily in particular is my focus and has been my focus, and I think that no matter what, people need a roof over their head. Now, the difficulties with multifamily are just, at least in new development, it's construction cost.
Hmm. Yeah.
So can you build it cheaply enough to be able to
Right.
to charge appropriate rents? And I think
Right.
when it
Yeah.
comes to yeah, that's definitely difficult.
Yeah.
Um, but when it comes to building up passive income, because if you're doing it, so are you're syndicating, you're raising funds from other people right now, and then how did you identify the deal, or do you have a deal in mind? Or
So I have a partner GP that
oh, okay,
goes out and does that,
okay,
and
gotcha,
my role is just to raise the capital to
yeah,
be a co-GP with
yeah,
the main GP
gotcha, okay,
together.
yeah, yeah. So it's you know making sure in your situation, making sure you partner with somebody who knows what they're looking at,
Mm-hmm.
or has again the
The
track
track
record.
record, yeah, the merit,
Yeah,
yeah.
yeah. And with real estate, I love real estate because of the advantages beyond the returns, specifically the tax advantages.
Mm-hmm.
That's something that depreciation is a
Yep.
wonderful thing.
Mm-hmm.
And even just recently, with new legislation coming forward, the Tax Cuts and Jobs Act being extended, and some of the accelerated or bonus depreciation coming
Mm-hmm.
back,
Going back, yeah,
like that is wonderful, and that's something that a lot of people don't know much about if they're
yeah.
outside the real estate world.
I didn't know
Yeah,
about it at all. I
yeah,
was like, what?
yeah,
You serious?
yeah. That's something that I always try to educate people on, because when you see from the outside, I think a lot of people in recent years have gotten um, almost distracted by the promise of wild short-term returns.
Yeah. What do you call it? Like I can't think of the word right now, but yeah, I can't think of the word. Like yeah.
Yeah, it's something that everybody in real estate has to battle, because when you're
Oh,
raising
instant gratification.
instant gratification,
Yes.
yes, yeah, that's definitely what people have been chasing for a long time, but especially since COVID. In 2021, with the stock market just went wild, and everything seemed to work. Whether you're putting money into real estate or into public equities or into cryptocurrencies, it seemed as if everything was working because there was so much money pumped into the system,
Mm-hmm.
and so it was hard for something to fail. Like, there was just so much money flowing, and people psychologically got too accustomed to abnormally high returns in that period.
Yeah, exactly.
And so when it comes to real estate,
Is it like the GameStop shit?
yeah,
Okay.
yeah, that
Okay.
that those situations that are, um,
It was just like a one-off.
yeah, they're one. They're
Yeah.
historical abnormalities. Huge standard deviations of this does not happen, but it did in many cases with things like GameStop. And so people are still holding on to the potential of something like that happening. Everybody wants a lottery ticket. And so when it comes to raising money for real estate, you're not only competing against, rather, the merits of the deal. Is it a good deal? But you're competing against other people that are raising. What opportunities are they approaching investors with? And how does that stack up to my own deal? So it's one thing to pitch an investor on the deal itself, but to make sure that they're convinced that, hey, this is better than all the other deals that they get sent.
I know that. Yeah.
Yeah, so
Agree there.
that's very difficult. But if you have the team, the track record,
Yeah.
all that, then it solves itself.
Just like you going back to what you said before, it's just like the psychology as well, right? Yeah. Like you say, raising capital is primarily just psychology. It's just the emotional and psychology part that people see, and what they see how you're doing and how you portray. So and that's one of the things that I'm still learning. I'm trying to also use AI as best as I can. So it's a learning process. So but yeah, but whatever you like, the things that you mentioned today, that's truly profound. Like wow, it's like okay, that's good to know. And from all you've done, your success and everything. So it's truly appreciate that.
Yeah,
I guess like what are your last words? Like you can share that will be a good golden nugget based on like things that you've gone through already.
yeah. I would say, and it comes to mind, for some responses I had to do for the Las Vegas Review Journal recently, and there was a
Okay.
question. Yeah. So there's an article coming out soon that one of the questions they'd asked me was, what advice would you give, a younger version of yourself?
Yes.
And that's, hindsight's always 2020, and you think you know what you're doing when you're young, and you think you know what you're doing when you're old. At the end of the day, nobody really knows what they're doing.
Yeah.
They just need to believe in themselves. But there's a quote, rather a suggested quote of Aristotle, who once said that a no great mind has ever existed without a touch of madness. And so I think that's something that every young entrepreneur should, firmly have. Now, when I say madness, I don't necessarily say reckless.
Okay.
It's more so an unshakable obsession. And so you're needing to be so obsessed with what you're building,
Like hyper
that
focus.
hyper focused, and again, the kind of the delusional optimism. You have to be willing to build even if people are doubting you, and to not give up, and to do whatever it takes to build whatever it is you're building. So I think that bit of knowledge for folks that are building is, don't be afraid to be criticized. Don't be afraid to, you're going to doubt yourself. Other people are going to doubt you.
Yeah. Okay.
And
Yeah.
so it's just a matter of realizing that you may feel crazy. Other people may tell you you're crazy. You should quit. Why are you doing this? And I think it's a matter of just don't give up on yourself, because no great mind has ever existed, without a touch of madness.
Right. Exactly.
Yeah.
It's the same as doing the 10,000 hour.
Yeah.
Just to get And so to end in conclusion, like how can people reach out to you? If people want to invest in Agrippa, Augustus.
Yeah. So Agrippa.com. That's our website for Agrippa, and then Augustus.capital is the website for Augustus. I'm on LinkedIn, Blake J. Owens, X, formerly Twitter, and Instagram as well, but that's more of a private thing. But whether it's through social media or through the websites, my email is blake@agrippa.com.
Okay.
So if people are interested in learning more about commercial real estate, investing in commercial real estate, or investing and learning more about tech, I always try to take time for situations like this where, hey, I want to give back, whether it's down the line investing into other people's businesses or sharing knowledge. Feel free to reach out at any point. I'll do my best to respond in a reasonable manner. That's something I've got to work on. There's so many things to do, so I try to be responsive as best I can. Yeah.
Awesome. Well, thank you so much again, Blake, for your time today. Thank you to Jackson for the podcast mention, and Bill Walsh again, and thank you so much again, Blake, for your time today. Appreciate your time. Thank you so much. So